everybody. Happy Friday. Welcome to this very special live stream. I'm Katy Perry, and today we are thrilled to be joined by Vlad Tenev, CEO and co-founder of Robinhood, just 2 days after their blockbuster Q1 earnings. Welcome to the show.
Thanks for having me. Good to be here, Katy.
We were just talking about you over at the Hashtag Awards. You guys took home Legend of the Year, and I gotta say, you weren't there to see it, but you brought the house down with your acceptance speech.
Yeah, I was sad not to be there in person, but yeah, I was happy to see Ben and Emil introducing me, which I thought was fun.
It was great. You were missed. Maybe next one we'll catch you, but your presence was definitely felt. And we're really excited to have you here today. We've been talking a lot about Hood on our Daily Rip show. There's just something in the water over there lately in terms of the product velocity. You have the strategies, the banking, the Cortex, and of course, great financial results that you all reported with revenues surging 50% year over year, net income more than doubling, net deposits hitting a record 18 billion, gold subscribers jumping to 3.2 million. Lots going on. We're here to unpack all the results for you guys. We've been looking at the community, seeing what all the followers of Hood on Stocktwits are saying. We're weaving some of their questions in. But we got a lot for you. So if you're ready, we'll get right into it.
Let's go. Let's do it.
Awesome. All right. So I want to start with the big picture. And I was reading through, I thought your earnings Q&A, there was a lot of good meat in there. Like that was a very good, there was a lot to, like, if you were an investor, a lot of pieces there in the commentary to pull from. And one thing that really stood out to me is when you were talking about your audience makeup over time and how that's sort of shifted. And you made a comment about getting less reliant on trading in the revenue mix. And I want to ask about that because obviously you started as, it pioneered zero commission. That was how you started, but now you're expanding into all these other financial products. So what is the right balance in the future between the trading products and the broader ecosystem that you're building?
Yeah, I mean, it's not something we manage towards explicitly because, um, yeah, it's more, you know, I have these independent teams. They all have aggressive goals, but I'm not like, oh, I want crypto to be, 25 or 30% of my revenue rather than 40%. It's more like Johan's our crypto GM. How can you grow your business as fast as possible? And, what does that look like? And, Steve Quirk, also, who's a chief brokerage officer running the brokerage business, he's got a lot of businesses under him, trading, the advisory business, Trade PMR, and they're growing as fast as possible too. So, yeah, I'd like trading to grow. I'd like to have more businesses. You mentioned banking, Cortex, strategies. So I think there will naturally be diversification as time goes on and as we just like keep adding more and more non-trading businesses. But I wouldn't say I'm targeting a particular percentage. I do think over the medium term, we should expect non-trading revenue to surpass trading. And then over the long term, over sort of our 10-year arc, non-retail, business and institutional, I think eventually will surpass retail, and ex-US will eventually surpass US revenue. So I think that's the exciting thing about our business. I see multiple vectors by which we can grow the business 10x independently, and they kind of like supplement and compound upon one another.
Yeah, so it's expanding and not necessarily taking away. And it's funny. A few weeks ago, my morning co-host Shai and I were talking about Robinhood. We're like, it feels like they're like becoming the Amazon or want to become the Amazon of any way you could possibly trade or hold money. And then on the earnings call, you referenced Amazon, Costco, that sort of membership model. Can you tell us a little bit about like the gold product and like sort of this membership layer, because that seems very differentiated in the financial markets right now, or at least finance products.
Yeah.
What's the thinking behind that?
Well, at the beginning, they would tell us that they would tell me subscription and membership just doesn't work in financial services for a variety of reasons. But I think the main thing was nobody had really done it before. Financial services, you have transaction revenue, which is basically commissions and payment for order flow, interest revenue, which is you earning a spread on assets through lending or borrowing them, but nobody had really done subscription. And our view was we think we could do subscription. We had it from a very early point where it was Robinhood Gold started out as a margin product in the early days. And then for a while, I'd say it had questionable product market fit. But then we really committed to having the best shot, giving it the best shot to be actually a useful subscription product a la Spotify Premium or Amazon Prime or Costco membership. So can we build a subscription product where, let's say, 50% plus of our customers over the long run would find value from it, and not just margin, which is relatively niche, predominantly for active traders. And so the first product that I'd say materially moved the needle when we put a gold layer on it was high APY. So high interest rate environment, Fed funds went way up post 2001. It really started in 2002, and we had to think about how to survive in that business environment, because the Robinhood that grew during COVID and went public was very much a company that thrived in a zero interest rate environment. So we had targeted first-time investors, and we wanted to be the best place for you to get started trading and investing. And so we were kind of like perceived as a novice first-time stock trading / like meme stock, a little bit of crypto company. And then, when interest rates went up, all of that dried up, basically. People became less interested, no pun intended, in buying stocks for the first time. There was less novice trading to begin with. And what was left was actually advanced traders who knew how to take advantage of a sideways or a market that was moving down, who we weren't really doing a good job of serving. And also customers that, wanted as much low risk yield as possible. In an environment that was paying you 4% risk-free, stocks become less attractive, but making interest risk-free becomes much more attractive. So we kind of did two things simultaneously. One was laser focused the trading side on the advanced customers, and we went up market there, while also doubling down on building products that were unique to the high interest rate environment. And that was really around Robinhood Gold. First being high APY, but eventually layering on retirement, layering on the credit card, which has done very, very well, and kind of now turning it into a comprehensive loyalty package, right? And I think Gold itself has a brand, and the brand we'd like you to associate with it is this is like a high net worth product. Anything that a high net worth individual can get from their private wealth manager or private banker should be available to Robinhood Gold, to a mass market audience, and for just $5 a month. So I think it's sort of like we're trying to do in financial services, luxury at a mass market price, which I don't think has been done before, but it's a fun product and brand challenge.
Yeah, I mean, the brand's amazing. I come from a marketing background, and just seeing the execution at some of these events. And sometimes when I see and I'm reading about Robinhood Gold, I'm wondering if there's a future where there's a Robinhood Gold airport lounge or something. It feels almost something like that. Have you considered, is that how big you think this could become, where if being a member of Robinhood Gold is sort of the badge you wear, as you would Delta, American Express, other brands?
Yeah, and I think we could actually surpass some of those brands while still maintaining accessibility. And $5 a month is a subscription, but it's actually relatively low barrier to entry, right? It's like a cup of coffee a month. Yeah. But yeah, I mean, we're really, for all the products we put inside Robinhood Gold, we actually think a lot about what a wealthy person has access to that isn't available to the mass market, and can we actually use technology to deliver it and improve upon it for a wider audience. Good example there being at the Gold event, we announced this cash delivery product. So I think cash delivery is interesting people talk about it, but also if you're a high net worth individual, private bankers offer this service for you. Like you can get an armored truck show
Wow.
up at your house so you don't have to go to the ATM. And of course, that's very expensive and it's for much larger amounts of money. But that was kind of like what prompted us thinking about it, because there was this one really nice high net worth private bank, First Republic, that, failed and eventually got folded into JP Morgan Chase. But that to us left a gap in the market. Like there is no consumer friendly private bank in our opinion right now, and certainly not one that has any semblance of like a mobile digital strategy. So that got us very excited about it. And of course, we think gold is a natural place for it.
Yeah, I think thematically, I mean, you guys started by taking this thing that only wealthy people were doing, using tech to bring it to more people. It sounds like, and reading your op-ed on tokenization and expanding into different asset classes. For people who maybe didn't read, you had op-ed in the Washington Post. I saw you speaking about this on Fox Business. Can you talk a little bit about the role tokenization plays in the future of Robinhood and where you see yourself fitting?
Yeah, I think tokenization is interesting. So really the best way to think about it is, can you take any asset and plug it into infrastructure that already exists in the form of, crypto and blockchain infrastructure, and have it behave like a stock? And in some ways behave even better than a stock, because you get 24/7 trading and global liquidity, two things that have been very, very difficult to sort of like engineer into the existing stock market. But you basically get them out of the box, batteries included. So you can take any asset, whether it be a company or maybe in the future a piece of art or another collectible, and just plug it into a blockchain. You get access to everyone who has a crypto wallet, centralized and decentralized, and it can be traded and fractionalized and put into a liquidity pool on a DEX. But from a user standpoint, you could just buy and sell it whenever you want. And I think that technology exists to do this. And if we had regulatory clarity, it could lead to real tangible benefits, like the ability for retail investors worldwide to get access to US private companies like SpaceX and OpenAI, which, don't want to go public, are foregoing it, but still, make their shares available in secondary markets to interested parties. So I think it could solve multiple problems. It could solve a problem of early stage companies that want to raise primary capital, late stage startup employees looking for secondary capital, but also retail investors that, have been seeing gains that would have otherwise been available to them in the public markets, just being reserved for a smaller and smaller number of insiders, venture capitalists and private equity. And if we can do that, I think that would have huge impact, not just for retail investors, but for the overall ecosystem. And I think more technology and more startups would be created in America if we were able to achieve this.
Yeah, the private market investing opportunity is fascinating to me, because if it were as easy to transact as SpaceX and Anthropic, like, do you think as many companies would IPO, or would that just be another path you could take or go private? But if the access is there to retail investors either way, I think a lot can change the dynamic of the markets itself. And policy-wise, I know you've kind of advocated for this rethink on the accredited investor rules. What is your perspective on that? What do you think needs to change?
Well, I think the status quo is that you can buy a meme coin pretty freely if you wanted to, and there's hundreds of thousands of them created every week, and I think it's a very powerful technology. Obviously, I'm supportive of it being available, but also juxtapose that to with like OpenAI and SpaceX, companies like that being deemed too risky for retail to have access to. In the accredited investor rules, which impose net worth or annual income requirements on people investing in private companies, shut out north of 80% of the investing public from these types of opportunities. In addition to just making it much more onerous on the company side. So what I'd like to see and what we'd advocate for is basically a self-certification requirement for individuals. So you should be able to self-certify, say you understand the risks and get some form of access. And I think that can be coupled with some requirements on brokers who list these assets, where we can put assets into different buckets depending on the level of disclosure they make. So you can imagine, for instance, if there's a company that chooses not to do any financial disclosure, we could put a red skull and crossbones on it and say, this is incredibly risky, no disclosure, we don't know anything about this company. But then you have, private companies that actually go through willingly extensive auditing, right? And they very much resemble public companies in the level of transparency and financial disclosure they make, and they would be in a different tier. Still, maybe not to IPO or public company level, but they could opt in themselves to sort of like a different tier of disclosure.
Yeah, and perhaps with more access, they would kind of meet the demand of retail investors looking for more information and transparency and information on the company, and kind of naturally adapt to that. I think with the accredited investor status, you kind of referenced this point earlier on just the knowledge that people are building, because I think something people miss sometimes when they say Reddit investor, Robinhood investor, they're stuck in 2020 or stuck when you guys started. And these are people that have been in their app pretty much every day for 5 years now. And they're in crypto and they're in all these products. And so I think a lot about just like how different education is now. It's kind of reminds me of like studying a language in school versus these people have been living in this other country. Do you see that in your users, like the cohort of people who came in, at the beginning to now? You don't stay one level or one type of user. You seem to evolve over time.
Yeah, I mean, our average customer is like mid-30s. These aren't children, right? These are grown adults. So I think there's this meme that's been falsely created that we've got a bunch of children trading stocks. But, these are, first of all, you obviously have to be 18 to create a Robinhood account. So you're an adult anyway, but the average customers are in their 30s. And to your point, a lot of them have kind of grown with us. Maybe they've joined Robinhood in their mid-20s. Now they've been on the platform 10 years. I think investing and trading is similar to playing a musical instrument or playing a sport. It's one thing to read a book on it, but actually the best way to get better is to actually practice and do it. And that's something we believe from the very beginning, that you don't read a book to improve at the violin, right? It can only get you so far. I think for me personally, before I started my first company, I was considering being an options trader. So I was interviewing at options trading firms. I was reading these big books on the Greeks and how to price options. And it's hard until you actually like sit down and start trading these things. It's impossible for you to figure out how they work. And I was a mathematics PhD student, right? If there was anyone that would have gotten it from reading a book, it would have been me, and it's not possible.
Yeah. I think, just a fascinating product to be building. I want to get over to the product piece, because you're building something for an audience that is constantly changing and getting more sophisticated. So it seems like the velocity is a necessity, not just a nice to have. But I've worked at, startups, big companies. It gets really hard to ship quickly when you get bigger. And I'm curious, why are you guys able to do this? Why are you able to ship these big products so frequently? Is it the process? Is it the personnel? Like, what is it about how you all are doing it at the size you are that allows you to move so quickly?
Well, I think that I guess I don't know exactly how other companies work. I've never worked at another company, but a few things that we care about. Um, we're engineering driven, so uh, we care a lot about having really high quality infrastructure, really smart people working on it. I'd rather have a small number of extremely high quality people than sort of a large mediocre team. I think a lot of people equate shipping ability or velocity with headcount. I think in many ways it's the opposite. And I think we've been early to recognize that, and we also have invested a lot in just maintaining that, keeping it up, both through new technology, but also just making sure that we try to constrain the things we look at, uh, the bureaucracy, and just limit, bureaucracy and process at every possible point. Um, I think it also helps that I care about these things. So,
Yeah.
you know, I'm around and
Giving
I like to be in
feedback.
the details.
Yeah.
But yeah, I think that yeah, hard to compare with others. I still think we could be moving faster.
Oh, wow. Okay.
I mean, you see, if you're on our earnings calls, there's so many products that we have yet to ship. People are
Yeah.
asking about 401k plan administration for small businesses.
Yeah.
Um, there's so much we could be doing on institutional. We're still not live in most continents, right? So uh, I'd like to think that we're shipping a lot, but we're still very, very focused, and the space is so large that there's always more to do.
Yeah, even looking at the questions coming in from the community, a lot of them were product ideas, which I think is great. It's an engaged audience. Sometimes people are nitpicking things in the financials. And in this case, people are like, when are you coming to Germany?
Yeah.
Very different nature of conversations. On your note, I'm curious how you think about sort of the AI thing. Satya Nadella saying this week, 25 to 30% of their code is now written by AI. Do you know what that breakout looks like at Robinhood, or have any thoughts on kind of how that's being used internally?
Yeah, I wouldn't be surprised if it was at that level, possibly even higher. I mean, it's very easy for AI to write code now. Yeah, I mean, we're investing uh, largely. Yeah, we're investing in a big way. There's two big technological shifts that are happening right now in the world, and I think Robinhood and the financial industry is right squarely in the middle of them: AI and cryptocurrency. Um, and I think we can be a leader in both. We're definitely well positioned, I'd say. I think most financial companies don't really have a coherent AI strategy, but I think it's going to evolve in three different stages. The first is just changing internal operations. So everyone in the company will be using AI tools to augment the work that they're doing. Um, yeah, we're going to try to make it, we've tried to make it as easy as possible for not just individuals to use it, but for teams to adopt the APIs and have choice in what vendor to use, what AI model, whether to distill or fine tune, or just use something that's off the shelf. So we've made huge investments for the past couple of years, making it as easy as possible to adopt internally and actually goaling the teams on that. Then there's like co-pilots within product. So you go from internal to now, can it be inside the product in a way that's useful and not just putting like a wordy chat box in the app. Um, and so we've started to do that as well. In effect, I think the first two Cortex use cases are Copilot use cases, right? What's
Mm.
going on with the stock? How do I construct an options trade? You're still very much in control, but this tool is like augmenting your research or your transaction process. And then there's a third stage, which is basically, I call it autonomous financial agents. And these are going to be sophisticated AIs that can basically manage the entire life cycle of what you would have required a financial professional to do. So think, uh, you know, financial advice, tax, all of these things that you would require an individual to do for you. And, there's a wide variety of different skill sets there. I mean, you could have someone that went to Wharton versus someone that, you know, maybe did not, but is much cheaper. Um, and we could have AI augment the capabilities and that service, and that'll be infused throughout the product experience. So you should be able to see Cortex evolving much more, getting into the workflow, both of an active trader, passive investor, and also in all aspects of every financial transaction that you do. It could just be doing a lot of the heavy lifting. A lot of like the core transactional things will be done by AIs in the future.
It's fascinating to think of agentic AI as a layer, knowing your risk appetite, your preferences, but also having the layer of knowledge that an average person would spend hours researching, like putting that all together and, like you said, building your own workflow for your portfolio. Sounds very fun, but also very new and different. So that's going to be very interesting to see. You'll have to keep us posted. I think we have time for one more. I know you've been so generous with your time. We really appreciate it. I want to ask you about this idea of the American dream, because I saw you tweeted or shared somewhere, and it stuck out to me. It used to be, you know, I'm going to own a home. It's going to have a fence. I'm going to have a dog. And this idea, the whole concept of ownership, and it goes back to tokenization, is just changing. So I guess where do you see the American dream shifting for the next generation, and where does Robinhood fit in that picture?
I wrote I think I wrote a piece on this that went live January 27th, 2021. So I had a brief chance to go and talk about it, and then of course the whole GameStop stuff happened. But yeah, the American dream used to be basically solely focused on home ownership and like the white picket fence and, you know, the 30-year fixed mortgage. And it made sense because that was the primary way everyday Americans had to build wealth. You wouldn't have access to even stocks, much less private markets and other sophisticated assets. So that was the bulk. That was the bulk of your investment activity. I think nowadays, if you look at it, buying a house, it's, you know, a large transaction. You're getting an illiquid asset. You're paying a 5% plus commission, and basically you're extremely concentrated. And the 30-year fixed mortgage is a lot of leverage. You're basically like heavily levered onto this asset. So if you think about it that way, I think investing in the stock market and in other assets looks a little bit different. And now it's more accessible in a way that even buying a home isn't for so many younger Americans.
Yeah.
So I think the American dream is getting broader, and it's like less about home ownership and more about figuring out your finances and becoming an investor. And you can start that with much smaller amounts and as early as possible. So ownership into the American economy, which is increasingly representative of the global economy, I think still is incredibly important. And that drives a lot of the decisions about, you know, what products we offer at Robinhood, because we still want to make that as easy as possible. Even as we move up market, we don't want to forget about people just getting started and being able to participate at all levels. So that kind of remains core to what we do.
Yeah, I think the fragmentation, it's interesting because a house is such a tangible one big thing. But if you have Bitcoin, you own a piece of a collectible Michael Jordan
Yeah.
championship ring, and then you got your SPY. It seems like you're building that place where someone could say, this is what I own, this is who I am across all of these things, and have it all together in aggregate. That's kind of the vision for the future, where it's Robinhood is the one place where people sort of
Yeah.
build this.
I think that's a good way to put it. And of course, it's not like, you know, I don't believe in real estate. I do. I think you're absolutely right, though, that that these assets all behave the same way. And you have investments that you can own and touch and hold in your hand. You have investments like, you know, the ETFs or stocks that you mentioned that maybe you wouldn't. And I think people are becoming more cognizant about the similarities between all of those. And I think, with tokenization and with better products, people are going to start thinking of them a little bit differently. And your sense of value and investment will continue to evolve over time. I think we can help with that, with better products and continuing to add things to our roadmap.
Well, really exciting stuff. Thank you so much, Vlad Tenev, for stopping by today. I know you're having a busy week. Really appreciate your time. Yeah, thank you so much, and you'll have to come back soon.
Yeah, happy to do it.
Thanks,
Thanks,
everyone.
Katie.
Have a good weekend, everybody. We'll see you soon.